The S&P 500 just exited a technical bear market, but what does it mean when we go back from the 1920s and look at the data during these periods? The next 1 to 2 weeks, the next 3 to 12 months? Well, don't worry, we've got you covered with all of that information. We're also been talking about options. Zero DTEs are just heating up in certain stocks, and certain breakouts, such as Tesla here, are extreme. After hours, it was on fire with the GM news. But it doesn't just stop there. We've got a very compelling case now, actually, for the bears. And it comes down to what everybody else thinks in the market. The survey reports are in, and you might be surprised at what you're about to see. Join us. This will be a good one. Well, welcome back, everyone, to the Daily Show where we talk about markets around the world. If you like stocks, you like commodities and cryptos, of course, you've got to subscribe to this channel. We'll be talking about all of those and more. Smash the like button if you also find value in today's video. I'm sure you will. There's a lot to discuss. Let's begin with Tesla's new news. Opening the charging network for GM next year, and it was up after hours. Really, I think a lot of the up after hours action actually came from a huge squeeze, though, in the options, which we'll look at later in today's video. Let's also discuss S&P 500. It's exited its longest bear market since 1948. We've got the data coming up soon on what happens next. We also have a few other big news stories. Of course, we can see that people are really becoming divided. The bears are almost left the building and the bulls are all coming around, but a lot of people are still talking about hard landing possibilities. And yeah, it's still very, very probable based on the options, volatility, and of course, more importantly, the inverted yield curves. We've also got Zuckerberg getting a little salty about the Apple Vision Pro. He's decided it's not the one I want. I don't think it matters what he wants. I'm pretty sure it's what matters what we want. But anyway, what are your comments on the metaverse versus Apple? Who's going to win that one? I've got my own opinions later on in today's video on a certain stock. Might be Meta. Let's talk about performance after bear market exits. Now, here's where it gets a little bit spicy. Take a look at this. Percentage positive after we exit. Only 34% of the time a market's bullish 1 week later, 2 weeks later, and 3 weeks later. Actually, the statistics are in line with potential sell-offs. Surprising, isn't it? Then it gets pretty damn bullish over the next year. So you've got to be careful here about what this market may look like. Here's something I shared over on Twitter as well, and you can see all of the data going back over all of these periods of time since the 1920s. And there's a lot of pretty brutal sell-offs that actually start to occur after certain times that we've seen before. 2001, 2002, obviously 2008. Some notable times that were a little bit different was the end of the 2008 crisis and, of course, 2020. But I don't think we saw the same types of signals that we're seeing this time. And here's where I get into the new survey report. Wow, this thing is absolutely phenomenal. I actually thought it was photoshopped when I first saw it. So you might know in my previous daily video, I said that I would probably expect around a 30 to 32, 33% bull move. So basically people being a little bit more bullish. Boy, was I wrong. Take a look at that. 44.5% of respondents came in super bullish over the next 6 months. 31.2% neutral, and only 24.3% bears. I'll let you to think about what that means, but let's just say that's the highest reading I think I've seen in 2 years. So it's a significant bullish switch this week. At the same time, the fear and greed index is still in the extreme greed, and we're starting to hit the extreme zone. If you haven't already, why not check out our Twitter? We do share a whole bunch of extra information over there, and we will be doing little snippet videos as well as Twitter roll out some new video tools. So make sure to follow us in the links down in the description below. It's always exciting to get into some new content. Let's have a look at the S&P 500 call option. Wow, 700 billion. We've talked about this before. Peak FOMO? Possibly. This is from Goldman Sachs. We also know the biggest hedgers in the world have kind of continued to sell the market. At the moment, they're holding the bags very, very brutally. But generally, these guys do tend to win. And what I mean by that is they turn the market, and if they're wrong, they descale their position, then it turns. A similar thing happened actually in 2020, where we rolled really, really hot, and then all of a sudden we sold off in August, September, and then, of course, they deleveraged at that time. I'm looking for the deleveraging to show us also that we could be going for a new bull run. But if they keep going in, well, you know, the worst is yet to come. So what's going on with options vol? Well, we've discussed the structure of the S&P 500. The most hedged event is CPI and the Fed FOMC rate statement. That's all happening next week. Next week is the absolute news mecca, possibly of the last couple of months. What happens here is going to probably dictate what occurs moving forward. And with such bullish survey reads and all of these volatility spikes potentially dropping off, this means that hedges will be dropped. Now, you might notice that a lot of hedging drops off over this Friday. So it's potential that we might actually be bearish into the vol days, which is, of course, CPI Tuesday and Wednesday. Take it with a pinch of salt, but it is there. As an investor, do you need to be concerned right now? Probably trading about 18.2 times forward PE at this stage. That is up from a 16.8. It's not a standard deviation over. So really, if you're holding positions, I wouldn't be terrified of anything. It's all on an individual stock basis. Remember, as an investor, you got to be patient. Patience is the virtue here. It's the only way you'll beat the market long term. And the way you do it, well, you got to wait for at least averages. You'll notice that you get a lot of under averages and you do get a lot of spike downs that give you possible entry points over the years. And some of those entry points wipe off a couple of years of earnings too. So you'd be surprised how patience can pay off. Let's take a look at the S&P 500 pre-election. Where are we? Well, we're in June. Technically, we usually drive a little bit higher, but I'm thinking now, based on some of these things, we've only got a 1 to 2 week window here before something big happens in markets. It's all lining up, very similar times that I've seen before, and we've got some of those reasons right now. Here is a completion of basically Microsoft, Apple, Amazon, Meta, all of those together. Are they driving the market at the moment? The answer is no. We are seeing some rotation, but is that more just to get people rotating in so they get left holding it? It's very possible. And we know also that this market is quite far away from its 20 moving average. Now, that may not mean like much to you, but generally we get reversion. And we've seen a huge rise in these markets over the last couple of months. Obviously, people are very frustrated, but you can see why it might not be the best time to say, oh, this is a great buy area. We left the idea of really being short at this point in these types of tech stocks. They've run to what I like to call the next level of equilibrium. And this is where I expect fireworks. Now, I'm sure there'll be trappy, but at this point, mean reversion is quite a high percentage away. And we're talking around 14%. Not historically the most, but certainly high. NASDAQ versus IWM, there has been some rotation out of the tech stocks. They're not leading anymore. You can see that on this chart here, really represents it. You can, of course, put it on your trading view or your software if you use that key. There are some concerns still on the market. Skew is not compressing the way we want it to. So initial compression, check. Big pickup, a little bit too big. I would have rather that today in trade, we actually continue to sell off in the skew. So certainly something to watch. We want to see skew compression. I do not want to see new highs on the skew. That is not usually symptomatic of a market that's about to turn. But we have a lot of other reasons to like it. PCC, put call ratio, huge drop-offs. Similar times that we've gone this low in this particular cycle since 2022, we've usually seen a sell-off around 1 to 2 weeks later. Again, it's starting to line up with every other time that we've usually done this. And it's certainly an exciting period if you are here, but most people will have been already burnt in the market. And that's valid and fair enough. It just shows you that, risk management is key whenever you're looking at these types of things. The VVIX, the volatility of the volatility, has started spiking up. That's usually a sign of potential turns in markets. We saw a TD13. That's a pretty big deal. And of course, we've got the normal VIX heading below 2020 lows, which just means that basically the market is very complacent at this stage. And it makes sense. With this many calls in the market, how could you be anything otherwise? We've talked about sectors. We've talked about single stocks. There's certainly been a lot of opportunity. There will continue to be opportunity. Whether you're a bull or a bear, I wouldn't really worry. There's always another trade. A lot of people feel FOMO, and we'll see a stock, I'm sure, that's causing a lot of FOMO right now, which is Tesla. It's pretty much not connected to technicals. It is purely zero DTE. And we warned about this about 2 weeks ago. 230 was probably my max target. This thing has blown it out due to the news, but this is what happens. You can't always pick the absolute top, but I'm expecting some things we'll see later. Let's take a look at breadth here. It's improving. Stocks above 200-day average is better. That's a good sign from a market perspective. but it doesn't really change the fact that we are still quite far away from certain big indicators. Central bank liquidity was down, or at least the Fed's liquidity was down over the last 24 hours. That's a good sign. Again, we've got a deep red here, but nothing gets as deep a red as the Qs. Basically, the NASDAQ stocks are still super overpriced to where they should be. And we've seen similar times in August, similar times in March. And the last time we were this deep red was actually December of 21. So I don't like the market from a risk reward perspective here. I think so many stocks are hitting critical levels. Speaking of individual stocks, we've followed a couple on the bullish side recently. We talked about Disney. Didn't have a great session. It was basically flat, but it did still pick up. It's had a nice little week. It's better and it's performed better than the markets since we've talked about it. And of course, it's continuing to show a little bit of rotation into it. Here's the SPY versus the dollar index. Dollar index was down. We'll talk about that later. Again, if the dollar starts to strengthen next week, expect the market to potentially not like that. That's just one of the combos that we use. Let's get into a couple of stocks though. First up, the metaverse. I mean, Zuckerberg might not like the Apple Vision, but I think it's a better product. I'm interested in your comments down below and what you think. I don't really care about the Weverse or whatever he calls it. I just feel like it's like a little, remember the Nintendo Wii? I feel like that's what that metaverse is, but I might be mistaken. Let's move over here to the 61.8 fib. There's a big level for Meta. Obviously, it can go higher. It's totally possible. We did see those three tweezers over a couple of days ago. It sold off and it had a pretty weak day, 0.37 up on a day that was much, much more bullish with the type of turn that's there. Certainly leads you to believe that this could be one of the sell candidates moving forward. We've got SoFi. This is one of the bull candidates we had this week, thanks to you guys in the community. Actually, we talked about it this week, and it's been pretty good. I mean, basically on Monday was the discussion point about how it looked very bullish. It's got those options, done 15%. Is it a risky stock? Of course it is. Is it going to continue? Well, it's hit one of the big targets. This is the $8 plus, $8.22. Next target would be about just under 10. Generally speaking, it just really depends on how the 0DTE flow is going. And we're still seeing people buying calls on this in a big way. Another one I mentioned recently was Bug, which is cybersecurity ETF. This has got a nice base on it. Obviously broke that downward trend line. So it's just kind of sitting there on what Wyckoff would call an SOS level. If markets do continue to rotate and go strong, I wouldn't be surprised at all to see cybersecurity do a little bit better. The advent of AI generally brings with it, some security concerns. So I'm sure that will be an interesting topic of the future. Let's move over to utilities. Did they do well? Well, yes, actually. Didn't do as well as the market, but not that much behind it. And actually, we saw staples, we saw healthcare, and we saw utilities in some of the best rotations of the session. It just shows you there are other markets to make money from. And I've been yabbering on about this now for a couple of weeks. We saw the turn, obviously activated it. And from that point, pretty much it turned on Friday. I'm going to take halfway because that's where I saw the turn. It's about 3.33%. It may not sound like much, but it's a very defensive sector. So let's move over to the options activity. I'll just quickly reiterate the concept of this, which is, of course, 4,300, 4,350, getting a huge blocker on it from the amount of sold calls opened. We saw that about 4 days ago. It's helped us to kind of define a potential resistance point in this market. And between 4,350 and 4,300, we expect the SPY to struggle over the next coming weeks. Let's move over here to the options roulette game. And you can see here Tesla was the standout, 1.3 times the 90-day average. And it was huge volume, huge move, +5 after action because of the GM news. And it's in a squeeze, but I expect a PLTR style situation, which we'll go through a little bit later on. But yeah, it's a big trade at the moment. Another one that a lot of people were messaging me with, and I think it had some valid charts on it, was Adobe. And that was one we discussed in the Monday stream, 3.38 times the average volume, obviously calls on the side of the call side. Continues to run, and I still think single stocks and sectors are the best at the moment in terms of being able to find your edge. And they may be actually the best of the next decade. I think that indices could be starting to struggle from a perspective of rotation out of older companies into newer ones. Some notable low volume trades: Apple, Meta, Amazon. All of these ones weren't very hot in terms of how they were trading based on their 90-day. And if we scroll down, it was another outstanding performance from the calls. We haven't seen this in a while. Calls are outstripping puts by a significant degree. And with everyone turning bullish, and I mean clearly everyone based on these surveys, yeah, it's time to be ultra cautious. Remember, you don't have to be in anything. If you're going to pick stocks, you're going to be in any particular thing, you always need to practice patience and have a replicatable strategy. Just because you have an opinion doesn't mean it's a great concept. Let's move over here to SPY, Qs, IWM. Again, here the options trade volumes, some big volumes going through the SPY in general. And if we move over to the individual positions, it was pretty clear. It was a call day. Take a look at some of these calls. 430s, 428s, 429s, 4, of course, Friday. All of the main ones were calls in terms of the big volumes. Then we got a bunch of puts. Now, these are mostly all 0DTE Friday style trades and Thursday trades. So realistically, there's nothing here to note. But I did notice there was a couple of puts starting to come through for the OPEX next week. So what you're looking for is a lot more OPEX style trades, a bit more puts coming through. And of course, on Friday, if you start seeing flow of big put positions coming in and price actions following that, it could be a good sign that things are turning on the markets. Let's move over to the biggest ones. As I mentioned on Twitter, 11 trades made up almost half of all of the options volume on Tesla. This isn't Reddit. This is big players. And those big players are pushing 240s. They're pushing all sorts of crazy levels on Tesla. And I would expect some people to get seriously, unfortunately, liquidated with that stop hunt steal after hours. And that's going to be the biggest point of the day. Remember PLTR, though. That was something that happened. And while we're still seeing a bullish day on PLTR, I would guess that that is now in what we call a blow-off. So a huge move with a huge dump. Tesla's Friday is going to be wild. Whether it's Friday or Monday, I'm not exactly sure, but I would expect a big player to sell a huge position relatively soon. Would I guess or predict that? No, in terms of trading it, but I'm looking for the evidence on the charts, and that will probably be one of the final nails in the coffin for the market should it happen. Let's talk about target rate probabilities. As we refresh this, we can see that these economists have absolutely no idea. 1 minute they're 30% on the yes, a rate hike, then they're not. Who knows? Basically, I'm going to call it a 50-50. If you base your evidence on the RBA, which is Australia, and Bank of Canada, you would say they're going to raise a rate. If you think probably they're going to pause and then maybe raise 1 month after, that is also a possibility. Let's look at rotation. On 5 days, it doesn't look like there's much rotation into the defensives. Of course, here we've got staples, healthcare, utilities. Utilities doing pretty good, 3.62. But it was a lot of other hated markets that have done the best. Now, if we look at the last 24 hours, this is where you'll actually see some sneaky defensives floating behind. And the last 3 days have actually been okay for defensives. Utilities only up 0.44, staples and healthcare making up in that list. And they weren't that far behind old technology. So again, defensives starting to get rotation in on. If you take a look at this chart and kind of load the the brown here, you'll see the brown has had a good 3-day run. And that's I think very important to note that really a lot of these defensives, we're looking for them to pick up around now. Ideally pick up while we're at these highs, show another good Friday. That would be a key sign. Let's move over to the markets now. We've got SPX here versus treasuries. We've talked about this many times. Basically, we're just looking at the concept of previous time we had that debt ceiling. Will treasuries come out supreme? Well, I think they'll do okay, and treasuries at the moment are hovering around this 102, 100 level. I do think there is a possibility that treasuries can get back down here. I don't see treasuries much as a trade, but in general, as we see, all this liquidity hit the market, or at least get sucked, I guess, depending on how you're thinking about it. We've got a 75 fib and a 61.8 that are some interesting zones here for treasuries. And I'll be watching it very closely over the next coming months. And of course, I still am bullish on treasuries. Let's move over here to dollar index. What's going on there? Well, the DXY fell off, made a new low, daily close. Finally, a daily close that isn't just like some kind of wick doji thing, which these two have been. Is that now telling us that we're going to go further down, possibly for the US dollar? I would say that this is the type of thing we were looking for. We obviously thought up here was pretty big resistance. Next up, I would say about 102.90 is going to be key. That's a nice little level of demand, but it has made a lower low, and It's possible that it buys off here, but I think buys should be met by sell demand in this general curve. They're just trying to area, I guess. Let's move over to gold. Buyers came in right on the level. Very neutral, I would call this into CPI. I think gold's going to be very much traded based on yields. So next week when we have an interest rate decision and inflation numbers, we'll probably see gold break the range. Before then, it's unlikely it can do it, but it doesn't seem likely that it happens straight away. 2 hour on the oil trade. This actually went down. I thought it might find a new break high. I'm not trading it at all at the moment. Oil I'm staying away from probably until end of next week, and then we'll come back into really following this one. But I'd say I'm neutral in this position and not too many, kind of areas I'm looking at other than here and down here. Here, I'm very disinterested. And I've said that for a couple of days because I don't think there's that much technical edge. Let's move over to the one that you all want to talk about, I'm sure. And there's going to be a lot of people saying, 145, lol, Tom, what are you talking about? Yeah, well, look, I still think that's going to happen in the future. But anyway, timing is everything. And remember, you've got to pick your positions. So Tesla is no doubt taking the high after hours. It's going to open up with a gap. Now, the question is, how far up can it get? So this is being run by 0DTEs, and I'm seeing a potential waterfall here, which is a pretty rare kind of thing. It doesn't happen very often. Weekly will be the key. We'll report on it on the weekend. But if we see a waterfall, it does tend to mark the end of a pretty nice run. And I'll be watching it very, very closely here. When we talk about other kind of markets and the zones that you usually get to, we've traded to the 61.8 theoretically in the last day, so we're in the golden pocket. We probably will move through that zone, and I'm not sure how bad the squeeze is going to get. It's going to be based on how many people are heavily leveraged. I've said, several times, if you were going to try to short the last 24 hours, what did you need? You needed a gap down. Did you get it? No. Okay. So you had a gap up, no gap down, no trade. You cannot short it. It's very, very, very much run by these options at this stage. And of course, we absolutely stopped anything around there. And the reason is because we expected this move, that's fine. But when it doesn't turn here, you got to drop the position because it's more than likely going into its, very Reddit-focused probably trading realm. And it's been 0DTEs all the way. Do I think 145 can be reached and 120 in the future? I would say yes, it's still very possible. You might call me mad to say something like that. But yeah, again, I do think competition's coming in and it all comes down to really price action. And I'll trade it when necessary. Do I think we're getting near the end of this trend? I'd say so. And it's probably going to show up in a similar way to something like this. So let me just load PLTR on the screen. And I feel like this one's probably had its day in the sun. It had a nice little resurgence here on the session, but I don't like this trade at all anymore. I think it's taken the highs. It's shown itself. Some big player came in and massively sold it. Who knows who that is? Don't really care. But yeah, this is a big run. And that's symptomatic of nearing the end. And, I know it enough times to know it's statistically relevant. So you've got to just look at things on the surface. Is everything going to work the way you want it to? No, they're going to be like 7 out of 10, 6 out of 10, 8 out of 10 times. But yeah, I'm expecting something like this from Tesla and it's going to be fireworks. So hopefully you're on the right side of those fireworks or at least you're out and you're kind of just sitting there going, wow, this is definitely one that I'm watching. Let's move over to Apple. Apple found some resurgence, not back to our 61.8 yet. Like to see a bit of a sell-off on that. We are at all-time highs. The Apple goggles, they're out. Everybody's loving life on this particular stock. I think it's the worst risk reward at this point. Probably has, like anything, you could say, buy Apple and hold it for 10 years, you'll make money. Probably. But again, pricing and timing is everything. So at this stage, we haven't got a swing trend change. That would be like 170. And we're looking for any kind of sign of a pullback into a sell, which is probably going to need to get a little bit deeper to something like my watch reaction here level. So focused on that quite heavily. We're going to bring up the Nikkei here for a second, or the Nikkei, depending on how you call it. Basically, the Japanese market is trading ballistically at this stage, and I'm looking for turns on this. We saw some sell-off, nice little bullish kind of turn. You can see it's hard to stop these bull markets. It takes a little while. Often there's a lot of traps. So I'm watching this one very closely and then really putting a lot of similarities with the NASDAQ at this stage. So we'll be continuing to watch this one. There's not much going on in the world of the DAX. We'll load up the DAX here. It is boring. It's literally just sitting on the resistance. Pretty boring on the XJO. A weekly probably will not close underneath our trend line. So you can see here where it's at. Still looks really sick. Demand destruction is probably on its way still for markets. So I'm not a fan of this one, but I've said the same thing for many weeks, and for many weeks it's dropped off. And that's of course a better market to sell than until recently, probably the S&P 500 and the NASDAQ. Let's talk about a market that was okay to sell. One of our members in our private community bought this one up yesterday. It was a good short, so congrats to you. And we saw that in the private stream. It was actually a tale of two markets. The funny thing was the S&P 500 and the NASDAQ set up for day trade longs. Not maybe as long as they went, but certainly day trade longs for a little portion there. And the Russell, because it had outperformed for a couple of days, set up for a day trade short. It's actually looking a little bit weak now, the old Russell. So it hit our key zone, our most traded level, one of the areas we looked for. I would expect further weakness out of the Russell, most likely, and also potentially now some weakness coming forward for the Qs. Let's discuss those. Weekly here may close as a long leg doji. Who knows which one's going to go to yet. There's still a distinct possibility 370 is possible. We have not done a swing change turn. Let's have a look at the US 100. We mentioned that we don't close underneath 14,200. We do not get a swing change turn. Now, we closed near the lows in the previous session. So let's just go back over to the Qs. Let's have a look at the daily. And you can see here, close near the lows, rally. Generally, when you close near the lows, if you get a rally, it's a rally that usually sells. So this will be a very important Friday trade for this one. It's pulled back nice and deep, which is where you want it. And this is really the area where I'd like to see sellers. I think the problem with this market is you're trying to stop a freight train. And even though the surveys and everything else is pointing towards, yes, it's over, you have not seen a swing trend change. The only market we saw that actually weakened was the SPX. So speaking of S&P, it's come back up. It's given us the big daily close, which of course then solidified being out of the bear market. I'm sure that's going and hitting the news everywhere. I'm not discounting this as a possibility. I've said 4,300 to 4,350. I don't know where the turn's going to happen yet, but geez, I tell you what, the signs are pointing towards it more so than usual. And you might think it's mad, but at the same time, there's some significant signs, way more than at 4,200, way more at this point. Let's move over to the ES, what's going on in the US 500 futures. Let's go down to the 2 hour here. And you can see that, basically it did continue to sell off. This was the little buy that we had in the previous session. Stop losses held, rally held. Did I get the high? No. Did I see it go bullish? Sure, it is there. The sell that was here, you would have lost that position. Well, you wouldn't have lost it because your stop loss is above here, but I would have probably broken even that trade, taken half off here. You generally need to make them pay 2 to 1. So in this case, while you would have made money on the short, it's not that great realistically because it should have continued down. And we're looking for that kind of 42.20 zone, which would have been ideal. But yeah, the market set up with a bullish long. It's hard to stop this. And it kind of looks like it's trying to do a distribution. I'd be very careful of a high steal sometime around Friday, Monday, Tuesday, news, whatever it could be. There could be a significant liquidity high steal. And I think it's going to be a case of being patient, react, don't predict. Just to show you can extract okay money. That's a 2.69 trade out of, to 1, which is not huge, but it's certainly not bad. And it just shows you there is extraction in this market if you know the replication, the strategies, and you apply it. And of course, you consistently apply it throughout time. Let's refresh what's going on here with June in terms of the big OPEX data. We'll have a look at the 9th first so we can see 420 and 425 puts. So it's going to be hard for the market to go down too much. And of course, we're not going to probably see it go too much bullish either because we've got 428 calls and 435s. That's not a stock standard, but it's still almost 1 million units. Let's look over at the big one though, 3.5 million units expiring in the OPEX next week, 400 puts, max pain 410. We're far away from that. It'll be an exciting week. There'll be volatility, I would say, that will come back most likely after we see those hedges float off, and that's going to be more like the Tuesday, Wednesday. Let's check out what's going on with the Bitcoin. So Bitcoin continues to weaken. It doesn't look anything like the stock market at the moment, just kind of floating around. Still negative biased on this, looking for 24K, 24 and a half. Yeah, I'll update you if I see a change, but at this point, that's what we're looking at. Let's move over to the news, and it is really not about this week. It is about next week. Remember, Tuesday, CPI. Wow, it's going to be big. FOMC statement, another one. And then we go through onto Thursday. These are all New York Times core retail sales, ECB press conference, Bank of Japan coming out, prelim UOM consumer sentiment. It's a massive economic week, and there is huge things. So without further ado, make sure to subscribe and smash that like button if you enjoyed today's video. Look, we've been covering a lot of stuff. It's very rare I see this type of thing. And yeah, I mean, it certainly points towards the next 1 to 2 weeks being incredibly exciting in markets in terms of just, I think opportunity. And if you're a bull as well, there could be some serious opportunity moving forward through this next couple of months because finally we might see some volatility action to the downside. Remember, we have not seen that in a while. It's just been squeeze and squeeze and squeeze. But with all of the signs, especially the put call ratios and everything, you're starting to get to that point where you can kind of see that while markets can do the unexpected, if you're patient, you wait for the turns, there's an opportunity whether you're a bull or a bear. 3 free trading cheat sheets. Follow us on Twitter if you're interested. And of course, everything else in the links in the description down below. Thank you so much. Bye for now.